So that's why we tell you, if you have learned, applied, grew to a point that you have a level of success, it might be time to take the relationship to the next level and fulfill the abundance cycle. And that's why if you'll go to moneyguy.com, we do have a work with us section. And this is the graph that we showed is something that we kind of took a screenshot off of the same tools we use for our financial planning clients. So that way you can work with your life insurance agent, with your financial planner, with your CPA, and any of your other advisors, and we can figure out the perfect situation for your needs.
Okay, Brian, so we've talked about why we need life insurance. We've talked about the different types, talked about how much we need. And we've sort of already admitted that we love term insurance. Like if you ask for our bias, we really like term insurance, which suggests that there is an insurance coverage in place for a period of time and then it goes away. Well, the fact that it goes away might suggest that there's a period of time where we don't need life insurance. And so we want to talk about when are the times that you actually don't need life insurance? When are the stages in life where that's not something you need? I'll go first, right? We've already said that you have an insurable need on your life when there are other people that depend on you. Well, for most of us, when we are young, when we're starting out in our careers, we don't have a spouse, we don't have debts, we don't have any kids. There aren't people depending on us. So I would argue that early on in your life, early on in your adult life, you probably don't need to go out and buy life insurance. When you're thinking about your financial order of operations and do I put money into my Roth IRA or do I go out and buy some life insurance? I would argue that for young people with no obligations and no one depending on them, that Roth IRA is probably going to be more valuable than going out and get a life insurance policy in place.
Well, without a doubt. I mean, I definitely think that this is one of those things that's driven by when is someone counting on you and you're worried about unfulfilled obligations being funded. Mm-hmm. I mean, that's the biggest thing. As soon as I got married and we took on debt, I was like, wow, there's a risk because I don't want to leave my wife with this mortgage. And then the next is once we started having children, I was like, man, whoa, we just bumped up the need much more. And then I'll even say it because my family history on medical stuff is not perfect. So as I got into my 30s and I was still very healthy, I started extending out. Instead of looking at 20-year term, I started thinking about 30-year term because insurability is something that you should take into account because especially when you're going down the term path is because you're not guaranteed that when you're in your 40s or 50s that you're going to be in the perfect health to keep extending out that. But without a doubt, I do think you'll get to a point now, and I'm right here right now.
Sure.